Hi everyone, welcome to the Screencast, and today we'll be talking about adjusting entries. Before we start to record any adjusting entries, we must first understand the context behind it. Typical accounting practices include two methods that record revenues or expenses. Firstly, we have the cash basis. This is where revenue is recorded when cash is received and expenses are recorded when cash is paid. The second method is the accrual basis. Through this basis, revenues are recorded when they are earned and expenses are recorded when they are incurred. As the accrual basis method adheres to the generally accepted accounting principles, adjusting entries made to ensure that all records are properly recorded and that they are also in line with the principles and also adhere to the matching and revenue recognition principles. An important thing to note is that in adjusting entries, the cash account is never used. After an accounting period is over and the trial balance is completed, we can then complete the adjusting entry. For the purpose of the screencast, we will use Max the plumber and his business as an example and understand the 4 different types of adjusting entries. Number 1 is deferred revenue. Cash is received before the revenue is earned. Therefore, the cash is received as a liability as it has yet not been earned. For example, Max is paid $500 for plumbing services to be completed in June. On the 1st of May, cash is debited $500 and unearned revenue is credited $500. The adjusting entry would then be posted at the end of June as debit unearned revenue and credit service revenue. Second, we have accrued revenue. This is where cash is received after the revenue is earned. For example, Max performs plumbing services on the 25th of May, bills the client on the 30th of May for $500, but doesn't receive payment until on the 5th of June. On the 31st of May, accounts receivable will be debited for $500 and service revenue would be credited for $500. When the payment has then been made, on the 30th of June, cash will be debited and accounts receivable will be credited. Thirdly, we have deferred expense. Cash is paid before the expense is incurred. For example, Max pays 3 months' worth of rent in May for $12,000. In May, prepaid rent would be debited and cash would be credited. The next month's entry would be debit rent expense for $4,000 and credit prepaid rent for $4,000. Lastly, we have accrued expense. Cash is paid after the expense is incurred. For example, Max's electricity bill for the period of May is paid in June for $400. After the bill has been paid, the entry would be in June, debit accounts payable and credit cash.